Thanks, Nisa. I'm delighted today to be joined by Matt Roszak, co-founder and chairman of Bloq. Hey, Matt, thanks so much for joining us today.
Hey, Tina. Thanks for having me.
Yeah, it's a pleasure. So, many people would consider you a Bitcoin OG, Matt, and you've worn and wear now many hats. So for our viewers, can you tell us a little bit about yourself, your background, and how you ended up in Bitcoin and blockchain?
Well, I've always loved technology. I did some coding when I was a kid and got into the early internet. So in the late 90s, started investing in building internet companies. Some worked out, some didn't. Wound up co-founding 4 enterprise software companies, ran a venture fund. So I was very active at this intersection of tech and finance. Did a stint at a private equity firm early in my career. So I was always fascinated by this intersection of financing, technology, venture, et cetera. And then in the kind of the .com craze, learned about investing, but moreover learned about people. And once you invest in people and you're kind of invested, how to build a compass, how to read people, how to work with people. And that was, I think, the biggest benefit in investing in lots of startups in a concentrated period of time. And so fast forward to about 2010, 2011, I was chairman of a social gaming company in Singapore. Bought a company there about 10, 15 years ago. And it wound up having to deal with payment processing as a core competency. And somebody mentioned Bitcoin. And this is now 2010, 2011. And in Singapore, flying back to Chicago, it was like crickets. Nobody heard about Bitcoin. I talked to a lot of top quartile VCs that invested in some of my companies. They're like, no, that's crazy. What are you talking about? It was like, I was like, either there's something not here or there's something really here. Because when you kind of get that reaction, it's kind of binary in a way. So we invested in Kraken and Coinbase and BTC China and a lot of the kind of early exchanges, wallets, payment processors, a lot of the bridges, roads, and tunnels. And that really kind of got me to invest in a lot of other, Ethereum and Ethereum killers out there, whether it was Block.One or EOS and others. Not that I was looking to say, oh, what's the biggest, baddest one? It was more so I want to learn, and all these investments, whether it's an exchange or payment processor or the decentralized network, it was more over like these were like building this heat map of the space to really understand what's happening and not happening, and the white spaces that were kind of forming in between.
In 2010, you could lock yourself away for a weekend and learn about Bitcoin. And people ask me now, how long will it take for me to amass the knowledge that I need in this space? And I'm like, well, you need to be really curious and really passionate and really interested, because there's a lot to learn. And so now for someone to kind of get their arms around this space, it's becoming specialized, right? Where, the information is just expounding and multiplying at such a rapid rate. And I think, we were privileged to get in early so that, we're not necessarily like a frog jumping into a boiling pot today, right?
Totally. I couldn't agree with you more. And it's like, I don't think there's any, I'm still a student, you're still a student in this, the ground, and it's one of the exciting things of this space is that the ground shifts underneath your feet, sometimes in an anxious way, but mostly in an exciting way, where you see these innovations, you see the bridges, roads, and tunnels being brought up or built up, and then you see new people coming into the space, whether it's Paul Tudor Jones or MicroStrategy, which just bought $250 million worth of Bitcoin, and you see all these imprints, and it gets new people in the space to say maybe I should pay attention, because I mean we're humans, and the way we kind of like we have these kind of headline things that we see, and this is outside the crypto bubble, and they see hacks, they see fraud, they see it was originally drug money, it was all these nefarious type headlines that are, human nature kicks in, instincts kick in, and it's off-putting. So I'm going to not do that. And then when you see signals like Wall Street Jones and Microsoft and Goldman and Fidelity and all these data points, you're like, okay, so it's mature. And if you look back at any technology in the earliest days, it always had some weirdness. But in order for, and again, you look at railroads and telephony and internet and now blockchain-based networks and systems, if you said, oh, it's going to cost $10 billion or $20 billion to burnish this new network, this new railroad, et cetera, nobody would actually sign up and pay for that. You got to have a lot of innovation, missteps, crazy ideas. Out of those crazy ideas, one idea gets taken out and embedded into another new idea. And so that innovation cycle is the innovation cycle, and it usually costs more than what you would do to kind of spreadsheet out a pragmatic approach. And so it's kind of more the art than the science of building new networks.
Yeah, so true. So speaking of new builds, you co-founded Bloq, maybe not so new now, and what feels like a bit of a bygone era, when the strong narrative was around DLT enterprise use cases and blockchain tech. One of your co-founders, Jeff, was a longtime Bitcoin developer too. So tell us a little bit more about Bloq and what were your core objectives when you started the company, and how have things changed for you over the past few years as the goalposts continue to move?
So we've always been focused on public blockchain infrastructure. So in the early days of Bloq, we got attracted by a lot of household name, public, regulated banks, financial institutions, to help them build a compass, build a plan around blockchain and crypto. But the subset we dealt with were the ones that wanted to deal with public, tokenized networks, public blockchains. So, I mean, we were always like, if you want to, track cabbage on a blockchain, call IBM, they'll do a great job for you. If you want to engage in tokenized networks, that's what we do. So we built Fidelity's first Bitcoin wallet. We had a lot of cool imprints in building out that infrastructure. At the end of the day, we're plumbers, we're builders, we're kind of sitting behind the scenes of a lot of projects and platforms. Today, Bloq is building a lot of the core infrastructure to underpin blockchain. So that's nodes, data, staking services, and a whole other portfolio of things that will be coming out later this year, next year. And ultimately, all these services that you need to build and engage in these networks, there's like two sides of the equation here. There's the exchanges. So take a Binance that, I need to buy assets, trade assets, manage liquidity risk, all that stuff. There's another side in terms of the usage of these networks. Like, let's just take like a web server, and I need storage, compute, database, access, etc. That, what Amazon Web Services provides in one composite service, in the decentralized network, that's like, 5 or 8 different layers. And so when you think about like, okay, I want that, but I have to then now compose that and bring all these disparate pieces together, it's a lot of time, effort, friction, and doesn't really play well into human nature. Just give me a service, etc. And so the way you think about it is all these services, whether it's storage, compute, etc., they're vending machines that require a token for the service. And so you abstracting that and saying, we have an engine that will help you find storage based on time, security, and cost, based on these parameters, and we'll just deliver that to you. And so we're creating this program that harmonizes that experience, because right now it's really difficult to get all that individually. And so that's what Bloq is building towards. So you could maybe look at it as, if you squint your eyes, this is what Amazon Web Services will look like in 10 or 20 years. It's that level thing. Amazon did well for the early internet and cloud, but going forward, it's about managing these vending machines that require a token for a service that are all distributed. And so, we're not going to be building huge, warehouses full of servers. It's going to be done on a distributed basis.
So going back to that, entry level, not the souped up 5.0, entry level enterprise, are we still dealing in walled gardens, or are we actually moving toward, permissionless hybrids where, blockchain is really going to add some critical value, as opposed to, souped up databases for large banks to manage their information?
I think it's still early in that curve for them. I think, they're more predisposed to just buy some Bitcoin on their treasury than to dive into a tokenized network, because it's just easier and more discreet to say, oh yeah, we're into crypto. But for them to light up a new tokenized affinity token for their customers, when they buy more, they get more, kind of a thing, tracking and tracing a lot of that with these incentives. It doesn't seem like a heavy lift, but it's so external. There's marketing, there's compliance, all these other things that is more complicated to do and orchestrate. And so I think, people tokenizing their mileage points and being able to trade those mileage points as a basic as an example that is. But I think a lot of these, if these mileage points, these affinity points are thought of carefully, they could be really amazing currencies for those ecosystems, much like what Binance has done. It's using it in the 1.0 is like trade more, get more. You could pay less fees for this. And then you have special things that unlock if you're a holder, like to get into an IEO, to try new products, etc. And so that they've used that to an advantage. A lot of other exchanges have followed suit, because now if I'm an exchange without a token, I'm at a massive disadvantage from the marketing and interplay and stickiness of a network.
So jumping back to something you said earlier, your years as a private equity investor, managing billion-dollar funds. So your early investment thesis when you first got into Bitcoin, how was that thesis influenced by the combination of the traditional finance background that you had previously and the discovery down the rabbit hole? Tell me about that convergence.
Well, actually, the private equity experience was it like had antibodies to fund innovation. It was like pragmatic, good brand, defensive market position, all those things. And so I was with Advent International in London when I jumped ship to the internet world, and they missed the whole internet because they were pragmatic, they were disciplined, and they didn't invest outside their lane. And getting in the early internet, learning how to work with entrepreneurs, how to back entrepreneurs, how to spot entrepreneurs, some pattern recognition there always helped. And so my gravitational pull in the early days of crypto was always hang out with the developers. And so I went to a lot of conferences, sponsored a bunch of dinners, and it's what I like to do. It's like, I'm a foodie. And so dealing with food and conversations around crypto, which was a hack for me to learn. And that's how I got to learn about, what tech is coming up, what's hard, what's easy, and kind of distinguishing, what a, CoinDesk or a Cointelegraph or a Decrypt article can't really tell you. You got to like ask somebody. Yeah. And so that was really helpful. And I got to meet some of the best technologists in the space. That's how I met Jeff at one of my dinners, how I met CZ at one of my first dinners. So that was invaluable, just to be, again, going back to your earlier comment, we're all students in this, and the professors are the entrepreneurs, the technologists, and you got to hang out with them to kind of see around the proverbial corner here.
So where are we today? How far along are we on that path from, I don't know, crypto maturity and adoption, on a linear time frame? Where are we at?
I mean, when I first got into Bitcoin and crypto, I thought by 2020, we'd all be, paying for stuff with Bitcoin, and this would be more of a
really did.
It would be more of a thing. Like, it would be there'd be greater usage, greater adoption, etc. Everything in the early internet, a lot of the pitch decks, a lot of the ideas actually were spot on. It just took an extra 10 years to get there. Yeah. In this case, I think, if I look back at what we're doing here, it's a lot different. It's not like you and I are trading photos on Instagram. This is money. And so the adoption of money, the trust factors around money, the compliance, the custody, the confidence, all that stuff, it takes a lot longer to bake that cake.
For sure.
And so it's still in the oven and it's still baking, and you kind of chicken on it. It's like, hey, it's baking really well. And so I think seeing signals over the last year, I can't be more bullish about certainly Bitcoin and the rest of the ecosystem. I'm more bullish now than I've ever been, and I've always been kind of on the front end of adopting and building and investing in this space. But it's kind of satisfying to see big name investors, public companies engaging in this, but not just like, a flyer, like really thoughtful engagement, like writing a thesis or a paper or a statement on why. And then when you read why MicroStrategy or why Paul Tudor Jones engaged in Bitcoin, you're like, wow, they get it. They really get it.
Mm-hmm. Matt, it's been such a pleasure to have you. Thank you so much for joining us.
Thank you for having me. Thanks, Teana.